Hello everyone, welcome back to another FinMeUp podcast. I am Higgo, the founder and CEO of FinMeUp, and today I will be sharing with you my investing and investment strategy and philosophy. So, first of all, when it comes to assets, my first principle is diversification, but not every single diversification that there is, because remember, in every asset that you invest in, you must be able to track it, you must be able to understand it, and you must believe in it. So personally, I have a property that I bought a few years ago, and now I just rent it out, so I get capital growth and the passive income of the rental each month. I also have some gold, which is just a different type of asset to my largest portfolio. It's only like 0.5% of my total assets. I also have cryptocurrencies, and then my largest investments are equities, so stocks. So when it comes to investing in stocks, my philosophy and strategy, and I'm adopting it in more and more of my business and financial life, but it is, before you invest in a company, or I want to invest in a company, I ask myself, do I want to be on the board of directors? Do I want to be the CEO of this company? Would I start this type of company? So the reason for that is because when you ask yourself those questions, it really challenges your passion and your desires in life and your vision. For example, if a pharmaceutical company or a construction company or an engineering company comes to me and says, start this company, or do you want to be the CEO of this company? Or do you want to be part of the board of directors? I would say probably no, because I don't have any passion for that. I don't have any skills in that. My passion and skills lies in fintech and technology and more innovation type of things. Not that I'm saying those companies aren't, but it's just not my type of space. So, for example, on the JSE, there's a company called Adcock Ingram. Great company. And if I was just a normal investor, not really wanting to understand each company I invest in, but just diversifying in some good companies, which is not the best strategy at all, because you should really understand what you invest in, but then it's probably a good buy. But personally, I have no interest in pharmaceuticals. I don't have any interest in the medical space. So I rather sold those shares. The same with a company on the NASDAQ called Medtronic. It's an absolute phenomenal company, and I had shares in them, but I sold those shares to buy more Tesla and Square stock. With the Adcock Ingram shares I sold, I bought more Purple Group and Naspers stock. The reason for that is, so Purple Group owns Easy Equities. Easy Equities is a trading platform, and it's fintech, it's innovation. Naspers owns Prosus, which owns Tencent and various other fintech players across the globe. And for example, Tencent owns a music platform, it owns games, it owns Prosus also owns fintech players across the globe. So that is what I enjoy. That is where I find passion, and that is where I find belief. The same with Tesla. Tesla is changing our future. It is moving into this clean energy and the way we live our ordinary lives, because soon the autonomous taxis will come, which will probably take a big market share of Uber, the electric vehicles, which is clean energy and good for the environment. And personally, I also look at the management. So before you invest in a company, ask yourself, would I trust this CEO or these directors with my money? Would I want to work with them? Would I rely on them? And those questions will help you to make the right decisions. So it will help you to understand the company, but also if you find a passion and a desire in what the company does and their vision, it will also help you to maintain that long-term sustainability in your portfolio and investing in them, and later getting the compound interest and growth. So ask yourself, what is your passion? What is your vision? What are the companies that you would want to start or be a part of? Like I said, a company like Medtronic, and there's a few construction companies that are really quality companies, but I don't find interest in that. And when you don't find interest in something, it's the same when you were in school. Think back when you were in school. We all had subjects that we hated. Now, those subjects were important, especially for some people finding interest in those. But because you hated that subject or you didn't find interest in that subject, you struggled probably to understand the content of that subject, and you didn't really want to spend time on that subject, and it didn't come easy to you. Now, that's the same with investing and a company. When you buy shares in a company, you become an owner of that company, a partial owner of the company. You are a shareholder. So if you invest in a construction company, you are personally in the construction space. When you invest in a pharmaceutical company, you're in the pharmaceutical space. When you invest in agriculture, you're in the agriculture space. When you invest in fintech, you are in the fintech space. So that is with every industry, because when you buy shares in a company, you become an owner of that company, a partial owner of that company, which means you are in that industry. So when you buy a stock, it is essential to understand it, to love it, and to be able to, yes, I'm going to buy the share, but I'm going to keep it for 10, 15 years because I believe in their vision, in their long-term vision, and I want to be on board with what they do. So that is how I view my equities and invest in companies. So that is why I invested most of my percentage of portfolio in companies like Purple Group, Naspers, which owns Tencent, Tesla, Square. By the way, Tesla is my largest holding, even though there is so much volatility with that company and with everything going on in California, and they're not opening their factories, and they're the last company to be able to open their factories and all of that rubbish going on. But that doesn't bother me, because we will actually doing a podcast next week, and we'll share it with you, where we will discuss, so my co-founder and I will discuss where we see the next 10 years. So our predictions for the next 10 years, and two of those predictions are predictions that will actually benefit Tesla a lot, because wow, I really believe in that company and what they do, and the innovation, and they are so far ahead of their competitors. So I want to be with Elon Musk in a team, and that's why I bought Tesla shares. I want to be with Jack Dorsey in a team and part of a fintech company. That's why I bought Square, and they also do blockchain, which I also believe in. So there are so many aspects. So the questions you can ask yourself before you invest in a company: ask yourself, would I want to be in bed with the management? Would I trust them? Would I rely on them? Ask yourself, do I find passion in what the company does? Do I see a future in what the company does? Does my vision align with what the company does and their vision? Is it my passion what they do? And all of those questions will help you to understand if you really should invest in that company, because it will help you understand the company and essentially improve your belief in the company. Because too many times we make decisions by emotions and just by our gut, and sometimes our gut can be really, really correct and do well, but sometimes it can be wrong, because when we make emotional decisions when it comes to investing in assets, emotions can get the better of you and destroy your investments. Always do your research and understand everything in what you understand in a company. Obviously, it's difficult to understand every single aspect of a business, but like I said, like that subject in school, when you find a passion and an interest in the subject, you understand it better and you'll spend more time on it. And that's the same with companies. Remember, when you invest in a company, you become a partial owner of that company and you become part of that industry. So that's my strategy and philosophy. And when it comes to assets, of all assets, property, the same when property, when you invest in a property company. So I recently invested in Sirius Real Estate. They do properties and storage in Germany, and I find interest in property, and I want to be in the property space. That's why I bought those shares, because first of all, you don't have to be part of the operations. You don't have to do the hard work, the hard yards. You only have to think like you have to, and then invest in that, and then the management and the employees will do that for you. That's why it's so amazing investing in shares. The workers and the company and the directors, they work for you because you are an owner, you're not an employee. So that is just amazing in investing in stocks and companies. So when it comes to assets, property, cryptos, gold, bonds, stocks, first of all, diversify your assets. Second of all, understand where you diversify in. And third of all, do it for the long term. With long term comes compound growth, compound interest growth. And if you draw a graph, it's just an exponential growth. So it starts slow, but over time it just grows and grows. Because remember, let's say you invest in a company that is now $1 or R1. And in 10 years' time, for example, it is 100 Rand, a dollar or a share. Then, if the company grows by 1% from that $100 or Rand, then it is 101. And when it is 101, it's 1% growth on that day. But if you invested back when it was $1, then you double your money when it is $100 and it just grows by 1%. I hope you understand that. But that is just the power of compound growth. And markets will be volatile. So when markets go down, it might be clever to pick some of those shares. Because personally, a company like Tesla that I believe so much in, so many times people say, okay, it's too expensive or it's not going to work, whatever. But I believe in what they do. I believe in their vision. I believe in their execution. And every time when Tesla shares dip a bit and I have some money to invest in them, I buy. It doesn't matter what people say, because when you really understand something and believe in something, I might be wrong, but maybe not. So that is why you must rely on your own understanding, your own research, your own philosophy, your own vision, and that will help you make the right decisions. So this can be a strategy and philosophy you can also get into your life and integrate with your life's mission and vision. And just lastly, with assets are so great. Cash is trash, because when it's just in your bank account or just on your desk, the growth of cash is obviously much lower than inflation. Where if you invest in the S&P or all of that, then over the long term it just outgrows inflation and cash by far, especially if you understand the company to invest in and you do quality investments that gives you good returns. So personally, I want as little as possible cash. I only save the cash per month that I need to pay for basic expenses and also some enjoyment, because we all need to enjoy our lives. That's essential. We are here to enjoy our lives and have fun. So don't overburn yourselves, but just keep enough cash for all of that, and the rest, it might be clever just to invest in assets, because assets will generate you capital growth and passive income through dividends and just the growth overall. So when you are young, especially, build as many assets as you can, because it will clear the path for your future and for future success and for future expansion and growth. So I hope this helps you. Stay tuned for the podcast next week on the FinMeUp app. That will be our predictions for the next 5 to 10 years regarding various aspects of life and which companies may benefit from that. Cheers.